Welcome back, everyone. This is the second episode of The Business of Writing with Craig Martell and Joe Solari. I'm Joe Solari.
Hey, and I'm Craig Martell coming to you live from the subarctic.
So are you a little happier with my background?
Oh, much, much better. It looks businessy.
Good,
it's not
good.
a painted over blue screen, is it?
No, that's my real office. You and my wife both gave me a hard time about doing that in the basement, but I was, after some of our calls, how hard the internet was, I wanted to make sure that I had a good signal, and it's actually better in my basement because that's where the cable comes in. Well, I'm sure people really don't care about that. Let's get into what today's topic is, which is really, I thought we had some really great questions come back, and in reading those, rather than dive into something like federal taxes and tax deductions, I think we should kind of step back and really go with the basics and talk about things like profitability and cash flow and how people get comfortable with those concepts. Now, I am going to be talking through this about a spreadsheet that there'll be a link for at the bottom here. It's free. Anybody can get it. Please don't get overwhelmed by this thing. I guarantee if you keep watching these videos, I will get you so that this is the easiest, softest way, and you're comfortable operating the spreadsheet to run your business. But before you even put something like this together to know what those numbers are, you really need to plan, right?
Having a good plan is key to success. My second year of writing. So I had already published 15 books, 10 books, 12 books, something like that.
Okay.
So this was the new year. Now, I had the projection. Here's how many words per day. Here's how many days per month I will be producing content, the product to sell. We looked at it, calculated it out, estimated the books at 60 to 70,000 words, which is the wheelhouse between length and reader expectations, because you always want to meet your reader expectations, no matter which genre you're in. You have to hit those elements. So looked at it, back planned, scheduled the cover production well in advance for pretty much the whole year, and then went to it. As of September 2nd, I had published 10 books this year, 10 full-length novels, published 4 or 5 short stories, 3 different anthologies. So how I took that as it built, you have to understand the timing of the cash flow. And when I first started in the business, I had what I figured was 12 months of savings and bank in order to run my business before I needed to show a profit. It was just a hobby until then, even though I treated it as a business from day one. I treated it always as a business, and you'll be better off that way. And that's what we've been talking about here. Write the book, sell the book. If you write the best book in the world today and you sell 1 million copies on Amazon tomorrow, you're still not going to get paid for 2 months.
Mm-hmm.
So that goes to cash flow. If you spent $500,000 in advertising, you need to pay that before Amazon comps you for the sales.
Mm-hmm.
So how do you program that all out? And that's I also am a big fan of spreadsheets as a business diagnostics guy. When I was a business consultant, I built all these spreadsheets. So the timing, I front loaded a certain amount of cash, and this is something Joe will talk to you later on how you can finance your own business. I front loaded that cash and drew down, and my target was 50%, never to go below that 50% point before the revenue starts filling it back up, because that 50% point is, what if you get a BookBub deal? That might be $600, $900. Now, you're going to get the money back, but you pay BookBub, and then 2 months later, you're going to get the money back. And you're going to win. BookBub is a huge win. However, you might have to have $1,000 set aside just in case. And it's not just in case you get lucky. It's just in case you've set yourself up to win. Now, I haven't gotten a BookBub deal, but I'm ready. If they pull the trigger today, I will send them a check today. I actually just paid them PayPal.
Yeah.
And that goes for anything. What about editing? You've written a great book, but your first bunch of reviews are, hey, typos. So you need to get it to an editor. There's $1,000 there. That might be $500, whatever it might be. you pay that first before you get it back. So
Mm-hmm.
that's what, if you're writing one book a year, it takes an awful long time to get that back, and you're going to have to spend that money marketing. And the older a book gets before the next one comes out, the more money you have to spend on marketing to maintain a status quo. Mm-hmm. So your profitability, your margin goes down. So you hit a great book, it sells well, you've got a big margin because you've just launched it, you've paid for your cover, you've paid for your editing, maybe even proofreaders, maybe some marketing, and then it sells. But you've paid all those costs up front, and that's what you need to be prepared for. You can do it on the cheap, and some people have, where they've made their own covers, self-edited, got a bunch of beta readers, and launched a book at relatively no cost. My first book I launched at zero cost. I edited myself. I did it myself. Now, that wasn't the best book, but it did give me enough visibility with people that, hey, this guy can tell a story, but he can't edit. Right?
Yeah.
Got that. So getting it out there, I'm a fan of publishing when you're ready with whatever you have. If you can't possibly do any better, I read that book 10 times and whatever it is, you can get it out. Amazon makes it possible for you to publish at zero cost. And then you just jump on Facebook and tell your friends, tell family, hey, connect with other authors, and try not to be too abrasive or frictional in that you're asking, hey, I wrote a book. Can you take a look? A lot of experienced authors look at that and say, hey, come on, man. Get a better book next time. get some credibility before we talk. But you still have to get it out there, because somebody will read it and they'll tell you. And that's where I got, well, you need to get editing. So I pulled it and edited it and sent it back out. And guess what? The second time we sent it out with new covers, with a new title, edited, it was a bestseller. And all of that came at a cost, mind you. However, it was a cost with a plan that, hey, this is going to work because this is a good story. Here's the market we're going to target, and where we were going to go with that. It worked very, very well for me, and I think it's a process that can work well for anyone, as long as you're not completely stymied by the money. You don't have to spend a lot. You have to plan well in order to spend less. If you don't plan well, then you're paying last minute for an editor, which is going to cost you more. You're paying for, God, I need a great cover now. Well, those people charge an awful lot, the great cover people, and you have no time. So the longer you can plan, the better off you're going to be.
Absolutely. Yeah, the term that I use, and I've kind of taken this from some stuff I used to do around sales planning and management when you're growing a sales force, but I think the term that we should think about as authors is the launch trough. And what I mean by that is just what you were describing, and I'll show it here visually with a chart where you can see how that cash flow drops down. So in the spreadsheet that I've got, I'm using kind of the typical 20, if you took the concept of 20 books to 50K, right? Which works out to be about $210 a month per book, right? And if you were only going to spend $100 on editing, and these are really thin costs, but it kind of goes to your point. But let's say you're going to spend $100 on editing, $100 on a cover, $100 to format, and then $50 a month for your advertising. I mean, what do you? Most people don't understand the kind of money that you need to have to just not dip into your own funds, right? Like if you're going to have a little nest egg for your publishing business. So in the spreadsheet, I've worked that out, and with that model, you're talking about you need to have $1,140 to never go into the red, right? And that's assuming that you hit the numbers that you talk about in 20 books to 50K, that you're selling 2 books a day, right? So I think that'll be an eye-opener for a lot of people, that it's like, even with that kind of low entry cost of $300 a book, that it's $1,000. And why is that? It's because the things you said is that if you're rolling out a book every month, that means you've got $300, $350 once you start kicking in your marketing every month to keep that flywheel going, right? But Amazon doesn't pay you for 60 days, right? So they're a great customer because they always pay on the same day. It's not like other businesses where you got to chase them down for money, but it's not like you can call them and say, hey, things are a little tight right now. Can I get my check? It doesn't. Right?
Well, and it's like when you buy a house, how do you accrue your mortgage?
Mm-hmm.
Like if you launch your book on September 1st, it's actually going to be 90 days before. It's not the end of October. It's going to be the end of November when you actually get paid. So you got to keep that in mind. But your sales the whole month, that first paycheck is going to be pretty nice. You only get paid once, which is a relative statement. I get like 12 or 15 different checks from Amazon because of ACX, CreateSpace, all the different Amazon, Brazil, Mexico, India, UK.
Yeah.
So you get all of that. And I don't know why they can't consolidate it because they're sending it all to the same bank account. But I'm sure there's a business reason, and I'm okay because it's all money flowing.
Yeah, they make it pretty easy. I think that has a lot to do with how they're managing their taxes and how they've established these companies around the world. But, I think that there's, first off, as a writer, you have to be a little schizophrenic, right? We've said in this golden age of content development that it's easier than ever to be able to produce your content and connect with an audience. But it's a business that until you get the money where you can have somebody else, say, manage it for you, you have to be all of these things. So you have to be the writer, you have to be the marketer, you have to be the business manager, and you have to be the investor. You're investing in your business, right? And you have to think about the money that goes into it. A business calls what this cash we're talking about is working capital. And any business that doesn't have working capital, even if it's successful, fails, right? And it's counterintuitive because a high growth business actually requires more and more working capital just that stays in the business because they're giving credit to more customers or in our case, the more prolific you write, the more books you have to edit, the more books you have to buy covers for, the more marketing you may need to do, the more opportunities you have to advertise or to be in other people's mailing lists. All those things are going to require you to come up with a little more cash here and here, and it starts to add up.
For example, for me, I publish a book a month. I am prolific, as they say. I published my first book in January of 2016. By December, I had spent $25,000 on covers and editing.
Wow.
And also by that time, I had only pulled in approximately $12,000. So I was still very much in the red. Now, December was a banner month. And then every month after that, it's not a linear progression.
Mm-hmm.
It's not, I will make $7 on each book each day for 365 days. You might make $1,000 on that book the first day, and then it tapers down. Mm-hmm. So you see, we've all seen the graphs where you see that spike, release day, and then it drifts down, release day, and then it drifts down. You have to manage that so your troughs you have enough cash in order to inject back in. So when you get that spike, and what you'll see is the spikes get even higher. The tail gets higher. The tail with the residual book sales keeps building and building. And that's what we've seen this year. And the numbers this year are just obscene and put us well ahead of our cash needs. So if somebody came up with the most perfect cover and they wanted $2,000 for it, I could do that right now, no problem, because I've gotten ahead of that money curve. It's important, as Joe said, the more books you have, the more costs you have. What if somebody says, hey, if you rebrand this series, you're going to find this niche and you're going to kill it. And you look at it and say, yeah, that's true. Well, rebranding a series, now you need 4, 6, 12 new covers. You need a whole new marketing campaign. You don't need new editing because the stories hopefully are professional and sound at that point. But all of that, maybe even pay somebody for a blurb and ad copy. There's so many different things you can pay for to up your game. Or you can do it yourself and you save a few nickels.
Mm-hmm.
As you grow, and especially as your content becomes desirable, you build that following. You're going to find that it's so much easier just to pay. Here's my blurb doctor. Here's my formatter. Here's my cover guy, and you dump all that off on other people, and then you're managing your business. Mm-hmm. As opposed to right now where you're managing every aspect of your business. Now you're managing people, which is a completely different. I see you have The Goal on your shelf, which is a righteous and very, very nice book.
Yeah, it's a great book. Yeah. In fact, in my book, that's one of the things I talk about with applying the concept of the goal to a business from this perspective of the main constraint of a small business is the business owner, right? Because they're responsible for so much, and in the case of writing, you are the key constraint in this business, right? There's only, and when you go to write, then you can't do the other things. When you do the other things, you can't write. So understanding how much time you need for each one of these things is really important. But we should talk about that another day. Some of the stuff that I saw as far as questions, there was talking about tracking and, what do you use? What do you use for your business?
My niece is a CPA, so that makes things really easy. Now, she requested that I use QuickBooks, so I bought QuickBooks. I tried to use it. Oh, hell no. That learning curve was way too steep for me because I'm a spreadsheet guy. So I copy all the raw data from Amazon into my spreadsheet, and that's what I use. Mm-hmm. So it's important that you track it. Even if you only use paper and pen, you have to track it. Here's expenses, and when you're buying services, generally you don't have to pay now. I do because that makes it real easy. I can match the expense to the cost right then. And then the profitability is a separate tab on my spreadsheet, the separate revenue. And I have a running track. It's almost like thermometers. Here's how much you're spending. Here's how much you're making. And we like the making to be much higher than the spending. Mm-hmm. Although with all the travel for the conferences and stuff, I'm spending an awful lot. However, we can deduct that, and we'll talk about that with taxes later. But I use spreadsheets, and I am an Excel guru. So I use SUMIF and other formulas in order to categorize the spends. So it's easier to go and fill out for my Schedule C and for my CPA, because she says you got to categorize. So everything's categorized, so she can pull it up and then do my taxes later. Mm-hmm. But that's I pull all the raw data, and I work from the raw data, not what other people report.
Okay. Yeah. So for anybody that's getting started in this as an author, you can do paper and pencil. You could, and I would say that's probably okay if you're just a hobbyist and you're making more than $400 with your hobby, and you just need to tag, what costs for the end of the year. But anybody that's really looking at a business, I think the table, entry fee for this is you're going to have to do some spreadsheet work. Now, in this case, I'm going to give you a spreadsheet that any CPA could take what you put in this and develop your Schedule C and your balance sheet and do your end of the year work. And over time, we'll go through the different sections so that you understand how to use it. But one of the other questions was like, what else do you use? You mentioned QuickBooks. I've worked with QuickBooks a lot, and QuickBooks Online. It is a full-blown accounting package, and it makes sense if you're running a business. It's pretty expensive to run. I think the desktop version is probably about $300, $400, and then
all the other add-ons that you need. And I had all of that stuff because I was running a charity where I had employees and stuff like that. And what a monumental pain in my butt.
Yeah. And
the learning curve was too steep for me.
Yeah. Now there's another one that I use for my LLC called Wave. Are you familiar with it?
I am not.
So it's free, and I think it's either Paychex or ADP is the ones that run this thing. And it's free online. It's Wave accounting, and it's a good way to kind of to get into an accounting package, you could what you would do is you would hook this up to your business bank account. And then it would download all of the transactions that are flowing through that. And then you can categorize them. And it builds a spreadsheet, it builds an income statement and a balance sheet for you. And it is free. And it'll probably remain free because what they're trying to do is get you to run your business on it. And then when you do start to do payroll, they do the payroll through it and you get a fee charged for that. And they also offer credit card processing, which they make money on that. But
ADP and Paychex are both very sound companies. So whichever one runs that it's ADP probably pays 50% of the payroll in the United States because they know how to do it.
Right. And when we get into talking about like a higher level operation where you may be looking to start to pay yourself a salary, then there is probably an advantage to have that there because you can use that because if you're running a payroll system, even for one employee, it can be mind-numbing.
Yes. Well, and you brought up a great point. Start a business account. I'm a lawyer. I'm a business guy, and I did not start a business account. And actually, I have USAA because I'm retired Marine Corps, and they sent me a note saying we're going to close your account because we don't do business accounting, and you have business expenses in your account. And I'm like, oh my God! So I ran down and started an account. Like Wave, you get the software package. If you can link it to your business account, then it takes all that stuff and churns it, and then you can categorize and do your work. If you have intermingled funds, now you're going to have serious issues if you do get audited or just deducting the right stuff.
It's painful to your own brain to separate it.
Have a business account. Get a business checking account that's a separate account, and make sure that all of your business stuff goes through there.
Well, and if as a lawyer, that would be like, if there was a situation where you were trying to attach your personal liabilities to this business, I mean, they're running on this all through one account. No more questions, Your Honor.
Yeah, commingled funds mean you cannot avoid that liability. So it's now authors, our liability is pretty limited.
Yeah, and don't everyone run out and open up an account. It's just something to think about. So I just wanted to answer that question because I think that's something that with the spreadsheet and maybe something like Wave, you could get your hands around this thing really well and be prepared to grow your business as you move forward. But I wanted to take a step back, and we talked a little bit about this last week, but even before you talk about the whole business profitability and you talk about this launch trough that you have to get through, you really need to apply these principles to each book and look at what the book break-even cost is. And you talked a little bit about your strategy last week about how you guys, when you're planning your book launch, the first 2 days it's 99 cents?
First 1 day.
Okay, so 24 hours, 99 cents. And your expectation is to cover all your costs on day one?
Yes. Even at 99 cents with 35% royalty, yes.
So when we're writing our book, we need to understand what the costs are for specifically that book, whatever it is. Even if it's we were doing all that work, starting to collect those costs and applying it to that book so we can say, hey, when, for the next 48 hours, I'm going to sell the book for 99 cents. That means I'm making 35 cents on the book. I need to, divide that into whatever my costs are and know that I need to sell 500 or 1,000 books, whatever it might be, so that you can track all those building blocks. Because if each building block is losing you money, it just means that the negative number gets multiplied.
Yeah.
That's now from there. I think what we really should kind of get into is the difference between like profit and cash flow. I mean, we talk about running a profitable business, And the important thing for everybody to understand is that profit is your sales revenue less your expenses. Now, at this point, we're just talking about our book expenses. Later on, we'll talk about other expenses. And there's another concept to think about when we're talking about a business. And when you look at a business can be profitable on paper, right? So in that month, you sold $1,000 worth of books, or you got $1,000 worth of revenue. You got, $300 in expenses that you've attributed there, and you're like, woohoo! I made $700, but the cash doesn't flow in for another, whatever it may be, 60, 90 days. That's the difference. When those profits hit your bank account, that's when you're becoming cash flow positive. And the thing to think about for most of us when you're talking to an accountant or thinking about how you're going to do your accounting is you're going to run your business on a cash basis. Right? You may be a little more sophisticated and do an accrual basis, but for most folks, the kind of money they're making, you're going to run it on a cash basis. And what that means is that you're going to attribute revenue when it actually hits your account. Okay. So on the spreadsheet, I show an area where you can put your sales numbers, but the actual accounting doesn't work off of those sales numbers. That's just for record keeping. What you're going to be working off is income down, so that when that income comes in, if you had $200 in royalties that landed in January, but the cash comes in March. March is when you made the $200. Right? And anything before that you spent in expenses goes against no revenue at all. That makes sense?
You bet.
Yeah.
And also keep in mind that any positive cash flow, you have a huge deduction for taxes, and that's I see Joe has this in that spreadsheet. So you spent $300, you had $1,000 in revenue, so that's you're getting taxed on that $700. If it truly is positive cash flow, that's the difference. So it's not all of this. Joe and I are going to collect horror stories from people in April of next year when they say, "Oh my God, I made $100,000 last year, but I didn't pay any taxes, and now the revenue, now I've got a big tax bill that I can't pay." We don't want you to get into that situation. You don't need to pay quarterly. However, you do need to pay yourself quarterly and set that money aside, because the tax man cometh, and he is unforgiving.
Yeah, and there's going to be some pretty cool tricks I'm going to teach you to do with this spreadsheet. One of them that you've kind of tapped into is the tax function. So there's this blue number in taxes. If you put in what your tax rate is, right now on the sheet, the default is 30%. The months that you are profitable, it's going to allocate that amount of money, and it's going to take it out of your cash flow.
Beauty.
Okay? So
I saw that, man. It's a good feature.
So it's allocating that money. And, one of the things that people talk a lot about, not just in this business, but in all, privately held businesses, like how much can I put into expenses? And really you need to change your mindset, because what happens with most businesses is the money's coming in, they just start spending on expenses, and it's people treat it like free money. And then if they do have a bump, whether it's the economy or you have some bad book sales, now they're like, I got to cut expenses and I don't know what to cut. So what I want everyone to have is a philosophy of the first things you're going to do is you're going to pay Uncle Sam, right? That money has to be set aside and you can't touch it. It's not yours. The second thing is a function that I'm going to show you where you can use in the payroll area, even if you're not running a payroll, but how you can figure out, it's going to allocate some money for you. Okay. So, and let's say you start out with just 10%. Like, I'm going to make sure that 10% comes out of this business plus the appropriate taxes. So that even if I only sold $100 worth of books, that $10 comes to me, whether I go buy a cup of coffee or whatever it is, a new video game, I don't know, just so you get in the habit of making a profitable business profitable from day one, right? Because again, this isn't an author thing. This is a small business thing. They run a business and they don't make any personal wealth, right? The business grows, but all that money just keeps going back into the business, and they never seem to take anything out for themselves. And that's the real reason you do it is, to eventually be able to do this for a living. And a good way to do this is to creep up into it. Don't say, well, I'm going to run at a loss and not take anything out of it, and then someday I'll get the salary right. The real way to do it is to creep up to it and realize, okay, well, now I'm making $40,000 out of this thing. I really can quit my job, and that it's certain. It's not a gamble. So we're not going to do that in this video. I'll actually make a separate one just on these little snippets so you can watch them and see how to do it. But I think that's a real key thing to making sure that your business is profitable, is always allocating. Number one, Uncle Sam or whoever your taxing authority is, because I know we have international viewers. Two is pay yourself. And then what's left over is what you can start to say, well, this is my working capital in the business. Now, do I want that to go to book covers? Do I want it to go to a better editor? Do I want to start doing some traveling, going to conferences? And we'll get into the expenses that you can put in the business later. But think about it kind of backwards from what the money's left over is what you can afford. Does that make sense?
You bet, because that's cash flow marketing.
Yeah.
Nobody will know your book is out there unless you market. And the first expense people cut when they're successful and then they have a dip is marketing. And that's kind of a different attitude that doesn't. If people don't know, they will assume you've gone under. I've worked with companies that cut that marketing fee, and boy, their sales rocketed downward even faster after that. You've got to sell it like it's the best thing ever. You look at McDonald's; they went into the red by $1 billion, and hey, look what they did. They ratcheted up their marketing campaign, as opposed to saying, hey, we need to save $1 billion, cut that out of the marketing budget. Oh hell no. They doubled their marketing budget, and they changed their menu also, so you don't die from eating there, and became viable. And that's what we want as independent authors, is to always remain viable. And you do that if you have money at the end of the day. If you keep growing that, and 10% of $100 is $10. But what about that salmon month where you make 10,000? 10% is 1,000, and that's, if you're used to peeling that out, that's all yours to do with as you want, and you probably aren't spending 9,000 on marketing and covers and stuff, and you're going to see a lot left over, and then you're going to be able to pay yourself a salary, and happiness and joy will be yours.
Yeah.
And then you can dedicate your time to writing. Writers like to write, and that's what these podcasts are all about. How do we make the business, demystify the business in such a way that you can spend as little time as possible managing your successful business and keeping it successful while being very successful as a writer and produce more content and sell great books. I ask, please take a look at the spreadsheet. It's look at all of the columns and the areas. Hey, my internet connection is unstable. How about that?
Oh, yours looking good though.
Look at those columns, look at those things, and we'll eventually work on how to fill those in. Otherwise, look at it as a business, allocate some time, and spend a little bit of time managing and setting up your business. And that's something that we have put out in the 20 books group, but something Joe and I probably should publish a separate checklist of here's the things you need to consider to start your business. A separate bank account is important. A name, whether you register as an S corp or whatever, you don't need to do that right away, but just consider that. And how do you then? What account does your money roll into for the revenue? Where do you expend it? And how can you keep track of it, even if it's a separate credit card? But what's that cost? And those kinds of things. We'll publish a checklist. I have something already that I have. So
yeah, and this that'll be something we can put out. And you do a few of these things, and they again, with our methodology here, things scale up, right? So you get to a point, opening up a bank account, even if it's on your own social security number, but it's a separate account, is better than commingling. And most banks will can have a discounted accounting cost for that second bank account. You can always go through, once you do set up a corporation, closing that account and switching it over. There's processes to scale this thing up, and I think that we work through this process together by you get you guys out there watch these videos and ask questions, and over time this stuff will start to make sense. So like this spreadsheet, I know, like you said, look around at these things. Don't freak out. Don't get overwhelmed. All will be revealed in the end, right? You talk about being a spreadsheet guy. I'm a major geek with spreadsheets, and this thing is built to really help somebody. And you can, like I said, you can run your whole business off of it. It's got diagnostics in it. I don't expect you to know how to use it today. But point in case is when I did that survey, some of the people that did participate in it, just filling out that spreadsheet, they wrote me back and they're like, wow, this thing opened up my mind. Like how my business has changed and grown over time by collecting this data. And you're used to doing it, but it's something that everyone has to get in the habit of, is having a day, maybe it's only once a month, of going into Amazon and getting that data and putting it in the spreadsheet, filling in your expenses, doing all that stuff, and compartmentalizing your business. So that's the day the business manager is on. Like in my case, I have actually on my schedule, on my calendar, a block of time where I do that stuff, whether it's invoicing customers or doing the books for my own business, right? I don't like to do it. And I've been...
I love to do it, man. But I only spend like 3 or 4 hours a month because I have a separate travel spreadsheet that I can share that, and I will share that as part of my my nonfiction book that I'm working on, Become a Successful Author. Mm-hmm. It's a travel spreadsheet with drop downs. I got the idea from the military and from my last company of just a select for category drop downs, which all align with Schedule C deductions, and it works for me. It works well. But it only takes, like I said, 3 to 4 hours a month, and I probably spend 300 hours a month being an indie author. I spend 70 to 80 hours a week in the chair. But I am down to an absolute minimum. Sure, I understand this stuff, but I update my expenses every day. Anytime I spend money, I dive in my spreadsheet and I allocate it. I log it right then, and I print it. Because when it comes down to it, if you get audited, they want to see printed copies. It doesn't hurt to have digital copies, but if you have to dig out your bank statement from March 2017, why don't you just pull it because you've got all your stuff? I've got a stack of manila envelopes and folders with all of my stuff. And I print, file, and go back to work. It takes like a minute. But if you wait to do it, then it'll stack up and you're going to miss something.
Oh, yeah.
Like setting up ads. You do a marketing campaign. I do a marketing campaign every month for something. I'll have a countdown deal, and I'll have 5 or 6 different book promotion sites, Free Booksy, Read Cheaply, those kinds of places. So you pay, click, print, file, stick in your spreadsheet. A minute later, you're up to date. You can go back to doing what you love, which is writing a story.
Mm-hmm. And for the folks that aren't, necessarily going to go that deep and stay that organized, if you do something like that separate account with Wave, what it does is, and you can have that Wave account or that bank account then hooked to, say, your PayPal and the debit card that comes with that. And now you've got a great system for tracking those expenses. Now, Wave doesn't know how those are to be categorized, and you're going to spend once a month, you're going to go in there, or if you wait longer, it's going to be worse. But going in there and you got to categorize it, right? Tell it where it goes. After a while, though, what's great about it is it starts to learn, right? So whether it's that or QuickBooks, they start to say, okay, well, that's from Facebook. That's probably advertising. and it'll show up as advertising. So you just need to then say that it's correct and go through your list. But, you know, all these are time-saving tools, ways to keep you on the computer writing, not staring at a spreadsheet.
Yeah, I'm digging that. Maybe I'll go wave. Yeah. Who knows?
All right. Well, Craig, it's been great talking to you again. I guess we'll be either next week and we're going to go into expenses and taxes.
Yes. I've talked to my old man. He's an enrolled agent with the IRS, and as well as another individual who used to do taxes for like 20 years, and try to get a full list of what you can deduct as an indie author. And the first order of business, the important thing to remember is you can't deduct it if you haven't made it. So if you start a business in the fall and you're not getting the revenue from Amazon until after the new year, and you've spent $10,000 and only earned $1,000, you can only deduct $1,000. This is U.S. federal taxes, and that probably applies to your state as well. So then you've just spent $9,000. Now there's carryover if you're going to go a viable business. However, understand that you just need to make more than you spend, even if it is a hobby. As long as you're in the black, even if it's $5, you're still a viable business according to the IRS. So if that's all you want to do is make money from your writing to travel the world, then that's all you need to make, just $5 more than what you spend, and you are a viable business. Otherwise, the IRS, after either 5, I think they changed it to 5 from 7 years, 2 years out of 5, you need to be profitable. Otherwise, if you go all 5 years and you're in the red, then they kind of go back and take your deductions back, and that's not cool at all.
No, you don't want those letters coming to your house.
No.
And that's another thing for everyone to understand is that if you do get into trouble with the IRS, they are not going to call you. That is a scam.
That's a scam.
They're going to send you a letter. And you know what? If you get one of these letters, call them. They're normal human beings. They're not like evil Satanists that want your money. Like, they'll help you solve your problem.
Yeah.
Right.
Yeah.
But yeah, I had a friend that got one of those calls just recently, and it's like, nope. Unfortunately, I've gotten letters from those guys before for filing late and stuff like that with the LLC, and they send you a letter and they tell you when you got to get back to them, and it's usually pretty, they give you a lot of time to resolve the issue. But yeah, no phone calls from Uncle Sam.
Yeah, that's future business. We'll talk about that next week. But this week, hopefully you found something helpful out of our mindless rambling. The successful business, the success in your business will be selling more books. And as you go through it, don't let the business side of your business be so daunting that it holds you back and says, well, it makes writing not fun. And we don't ever want any author to be in that position where they're saying writing isn't fun because, hell, IRS is going to get on me, or I've got all this other accounting that I need to do. It's just not fun anymore. We don't want that at all.
No, that's right. And again, we're going to help you get to the point where you know how much medicine you have to take and when you have to take that medicine, and it'll just keep you healthy. That's the main concept here. It might get more and more intensive as your business is more successful, and we hope that all of you have to someday interview accountants.
You hire an accountant.
Yep. But in the beginning, you're probably going to be the business manager for a while. Yeah. And even after that, you need to know this stuff so you know that people aren't ripping you off or telling you, garbage about your business. All right. Well, this is Joe Solari. It's been great talking to you, Craig. And we'll sign off. See you guys next week.
Again, congratulations on the better backdrop this time, Joe. And you had no issues, so I think you have good enough internet in your good office as opposed to the dungeon.
The dungeon, yeah.
All right, man.
All right, see you later.
Thanks for listening. Appreciate it, and have a great writing day.